Hey traders, welcome back to Valorizo Capital. On today's video, we're going to go through the market update and we're also going to talk about the weekly watch list. I'm going to share one of my favorite setups going into next week, and also we're going to create a roadmap of what we can expect for the market next week. We're going to go, of course, to the SPX. We're going to use the ES futures, and then of course we're going to go through the NQ, and we're going to also talk a little bit about the rotation that we're seeing here in the market and what are the sectors that I'm expecting to be the ones that are gonna hold up the better if we continue to see a continuation in the pullback. Remember guys that this video is for informational purposes only, it's based just on my personal opinion and is not financial advice. And also guys, remember to subscribe to the channel, that way you can get alerted as soon as these videos go out to the platform. So let me just make myself a little bit smaller here. I'm trying a little bit a new software to upload my videos, which is pretty cool. So let's start here with the ES as we talk about. Let me just grab my drawing tools. So first chart that we're gonna take a look at is the ES. Most of you I know that are familiar with this, but for anyone who's new to the channel, these are the ES mini futures. So these futures contracts track the index of the S&P 500. So what is going to be the expectation here for next week? Remember that we are just trying to create a roadmap of what we are going to expect next week, right? This is not something that's saying that the market topped and we're not going to go higher anymore. This is just to create a roadmap for what could be the highest probability setup going into next week. So let me just hide my alert here. You can see that I have an alert at support. So let me just hide that alert for now. So you can see right here that the SPY has had a pretty strong run, right? You can see right here that we had this base, and of course we had the break to the upside, we had another base, and then we had another break to the upside. And right now what we're seeing is a little bit of a pause, right? And what is also interesting to see is that we're starting to see a lot of divergences in terms of momentum. You can see right here that we were going up, and momentum was also going to the upside in both of my indicators, which is actually pretty positive. And usually when we have that kind of environment, when the price is confirming more upside and momentum is confirming more upside, we just tend to see that continuation. But at some point we had to see a little bit of a pause in the buying pressure. That doesn't mean that the price has to stop going up, but we're starting to see a little bit of pause from buyers. So that's kind of what we're seeing right here. We can see right here that the price continues to go up, but we're starting to see a little bit of pause in momentum. So this is nothing to be worried about, right? Momentum can pick up back again really quickly. However, we have to be aware that when we start to see this pause, we tend to see these pullbacks a little bit more often, and we tend to see a little bit more chop. And if we're talking seasonality in August and September, we tend to see a little bit of chop, and sometimes we tend to see a little bit of pullback. A pullback, remember, is something that is normal in uptrends. So that's a misconception that I see a lot when we see all these guys talking about, oh my God, it's a new bull market. Yeah, a new bull market can easily come back here and test the rising 50 daily moving average. And that's a bull market, right? So we have to understand that a bull market is not a market that goes up every day. A bull market, we have periods in the bull market when we see really strong advances. We can see really strong advances in months or weeks, but at some point we see not even a correction. We see normal pullbacks into the 50 daily moving average, or we see normal pullbacks into that 10-week, which is, if you're familiar with William O'Neill's work and about how important is the 10-week, most of the people look at those charts and they're like, oh my God, that's a super easy uptrend to hold. It's just holding the 10-week. It's super easy. The reality is that when we have those pullbacks are designed to shake a lot of people. They're not super easy to hold, so you have to be aware of that. So even if the SPY here at some point during August or September pulls back to that 50 daily moving average, we continue to be in a bull market. So you have to be aware of that. So don't think that a pullback to the 50 daily moving average is something that, oh my God, it's not going to happen. So we have to take that into consideration. So going back to the main purpose of the video, what is the expectation for next week? You can see right here that we're starting to see a little bit of pause in these candles. You can see that we had kind of this reversal candle. We had it on Thursday, and then on Friday we're seeing some confirmation that buyers are unable to push this above this selling candle right here. So that's the first clue that is telling us that the psychology behind the move that we recently saw is changing just a little bit. So my expectation is always to play the high probability setup. And what is going to be that high probability setup? At least a pullback to close this gap, this little gap that we have right here, somewhere around 4,500. If we happen to see that pullback happens to coincide with the Fibonacci 50% retracement and 618% retracement zone measured from this low right here to this high right here. Any pullback into that zone is going to be an amazing opportunity to get some bullish exposure if we happen to see a bounce in the markets. And then of course we have to see if that bounce is going to be to new highs, or if that bounce is going to meet with resistance, and at some point we're going to meet that 50 daily moving average, which remember is a rising target. So price continues to consolidate, and given the recent action that we have seen, most likely this 50 daily moving average is going to continue to rise, and price is going to meet that 50 daily moving average at higher prices. So that's something that we have to understand as well. So in summary, what is the expectation? Expectation is just a slight pullback into that wave, same as we saw in these instances, and then perhaps we're going to be able to catch a bounce. Now let's take a look at the NQ, and then we're going to talk about the sectors that I think are going to be the best options to jump into some bouncing action if we see that pullback. Let's take a look at the NQ here. So the NQ is lagging. The NQ has been leading the entire move of this bull market that we have seen. The NQ has surged almost 50%, if I'm not mistaken, since the beginning of the year. So that's a huge move. That's a huge move. Doesn't mean it can go higher. It can definitely go higher. But we're starting to see some clues that we're probably going to see a pullback to that 50 daily moving average at some point next month. So what is the expectation for next week? I'm not interested in buying the NQ. One of the reasons is that if you compare the chart of the ES that we recently saw, and then you look at the NQ, what is the main difference? The main difference is that the SPY hasn't even touched the 50% retracement or the 618% retracement or the wave. That means that the ES is a relative outperformance when we talk about who's leading the market right now in this precise moment. We can see that the sellers are very, very strong here in the NQ. Mostly because of the mega caps and the rebalancing and blah 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 that we have, but what we care about is what is happening with the price. So what is the expectation for next week? If we happen to see a pullback in the S, I think that we're going to see a continuation in the pullback in the NQ, and that means that we're probably not going to see this really clean bouncing action that we saw these couple of weeks in the NQ, like the one that we saw here and the one that we saw right here. I think that there's a probability that we're gonna probably pierce through the 21 exponential moving average wave. If that happens, that's gonna be a huge change in character for the NQ. That's gonna mean that we're not trending as easily as we have been trending in the past, at least during this past probably couple of months since we have been trending about the 21 EMA wave, as you can see right here. Basically, since we have been trending since the last week of April. So that's a really, really strong trend. So if we happen to trade below the wave, I think that's going to be a huge character change in the NQ. And I'm not saying that it's going to top, right? I'm not saying that. I think that we're going to continue to see strength into the year end. However, I think that we are due for a test of that 50 daily moving average. If we happen to see that pierce, then I'm going to be looking for a bounce in the SPY, but then I'm probably going to be looking for a bounce in the NQ that is going to come into resistance, and then probably we're going to test that 50 daily moving average somewhere around this zone right here. So that's kind of the expectation. The expectation is that if we continue to see pullback in the NQ, probably it's not going to hold, and then we're probably going to see a little bit of chop resistance and an ultimate test of that 50 daily moving average. So what are the corners in the market which I consider offer the best options to buy a possible bounce in the market? The first is going to be the RTY. What is going to be the RTY? Because we're seeing a lot of outperformance in the financials, and of course the little financials, where we're talking about big banks, we're talking about the XLF, and then of course we're talking about the KRE, which is more like of the regional banks. And we have to remember that the Russell is heavily weighted in those sectors. And you can see right here that the Russell hasn't even pulled back that much, which is showing relative outperformance. So we happen to see a pullback, then probably the Russell has a higher probability of holding that 21 exponential moving average wave compared to the NQ. So I think that we're seeing here, and you can see right here that we're rising in price. We're also rising in momentum. So we're seeing that confirmation of momentum and also in price in the Russell. So I think that the higher probability trade is looking for a pullback in the Russell, buy that pullback, and then we're probably going to get an easier trade than focusing on the NQ. So the Russell is going to be the corner that I want to put my focus in, and then of course that other corner is going to be the ES. Now, what are going to be my favorite setups going into next week? So I have a couple of setups. One of the first setups is obviously going to be the RTY. I think that's a really high probability setup. Then I want to show you also another setup that I'm going to be watching for next week, and this is going to be the GDX. So before looking at the GDX, let me just show you how gold is looking, because I think that gold is about to turn pretty nicely here. So what we're seeing in gold, first of all, we're seeing that gold was not connected to the advance that we saw in the S&P and the NQ. So gold is trading on its own, which is normal, right? It's a completely different market. What I like about gold is that we're starting to see this kind of reversal pattern here. You can see that we have the base, and we're starting to see that momentum, which is very, very important. You can see right here that the momentum was below that moving average, was below the 50 line, and now we're starting to turn positive. Momentum is starting to turn positive in both of my indicators, and we're starting to see that confirmation in price. You can see that we were trading below the wave. Now we reclaim the wave, which is what a lot of people call the EMA crossback, based on the teachings of Oliver Kell. And now we're starting to see, we saw the wedge pop, and now we're starting to see that EMA crossback as the pullback to the 21 EMA wave. And these guys tend to be a really high probability setup for a continuation into the next level of supply. So I'm liking gold a lot. You of course can trade it with GLD and GLD calls, or you can trade it with the GDX, which is looking pretty awesome. And of course, if you want to look into what are the miners that are leading, you can do that, of course, but I think an easy way is just to trade the GDX and look for continuation. So we can see the similar setup. You can see that wedge pop. Now we're having that EMA crossback. Both momentum indicators are positive, and we have a really nice candle. This is a really nice candle from support that is showing that buyers are willing to support the price at these levels. And then I'm going to be looking for a retest of this supply area somewhere around 34. That's going to be kind of the target for GDX. And of course, my instrument for trading this is going to be Nugget, which is the 2x leverage ETF for gold, which is looking pretty awesome. And if you play this, you can make some really nice gains. And of course, the stop is going to be somewhere below the wave, looking for a little bit more upside. So that's going to be my favorite setup. Then of course, it's going to be RTY, as we mentioned, looking for a pullback into that wave. And then of course, I have a couple of oil names right here. If you want to take a look at those setups, you can definitely take a look at those setups. These are kind of some different names of what we are used to trade, so you can definitely take a look at those setups. But I want to show you Riot here before we end up this video and don't make it too long. One of the reasons that I want to share Riot is because I do think that we have a little bit more of opportunity here in these names. You can see that Riot break out from this base. We had a really nice advance, and now we're starting to see some sellers showing up. You can see that these exhaustion candles are starting to become a little bit more frequent in this move. Now, what is going to be the setup? The setup is pretty easy. You can see that momentum is positive. Setup is you can trade it here somewhere around demand, but of course, my favorite place is going to be waiting for that 21 exponential moving average wave to catch a little bit with price, and then perhaps we're going to see a little bit of continuation in Riot. And then I do think that we can take a look at coin, which is a pretty similar setup. And this is actually a pretty amazing setup as well. You can see that we have the breakout. We're starting to see a little bit of exhaustion in terms of candles. You can see that we're starting to break below this low. Any pullback to that 21 exponential moving average wave is probably going to offer a really nice opportunity for a run into these earnings right here. So that's going to be the setups that I'm going to be focusing on next week. So once again, thank you so much guys for watching the video. Remember that this video, the purpose of this video is just to form a roadmap for next week. Anything beyond that, we're going to continue to give these updates on a weekly basis. So thank you so much guys for watching. Remember to subscribe to the channel, and I will see you on future videos. Take care and bye bye.